So I expect a lot more downside before the markets move up. And today I want to share with you exactly what I'm looking at, trades that I'm looking to take this week along with my mentorship community so that we can take advantage of this downward pressure. First things first, I am not a licensed advisor. You should not just blindly follow random strangers on the internet. Do your own research. And the biggest piece of advice I can give you is learn how to read the charts. The cool thing about the charts is it gets you out of your head. It gets you out of the noise of YouTube. To be quite fair, I can't stand watching YouTube at the moment because it's all either doom and gloom, it's going to crash, it's never going to recover, it's all over, or it's the opposite, which is this is just temporary. We'll go back to all-time highs. As soon as this conflict's over, we'll be fine. Neither of those narratives serve you in this period of time. It either keeps you too fearful or too optimistic, but it keeps you out of the present moment and keeps you out of trading what's right in front of you. So learn how to read the charts because it keeps you out of the noise, out of the fear, out of the stress, out of the worry, and it keeps you just simply in the now and what's in front of you. And it also ensures that you're placing the trade that's right for the period of time we're in. So with all of that said, what am I seeing in the near term as far as downside goes? I kind of see this, right? When I say near term, I don't mean this week. We crash all the way down here, but at some point in the coming weeks, months maybe, we will most likely retest this high of last year pre-tariffs. So this is what I'm eyeing off. When we get here, then we simply reassess, right? What's it looking like here? Are we starting to build strength? Are we getting more downside? But for now, this is what I'm looking at. A few reasons why. Now, I've covered in a previous video about the monthly chart very, very quickly. The monthly chart all the way up here was looking super, super hot. Stochastic RSI needed to cool off, and I believe a bottom, which will realistically probably take us a little bit further than this level, but we just got to wait and see, right? We may even come back down to sort of the 530s, but for now, that next level is through here. The other thing that happened on the daily chart is we got this dome pattern, meaning we went like this, right? What happens with a dome pattern? This is a topping pattern. And typically what happens, whoops, let me delete that and pick up my line. When we get this dome pattern, it's a topping pattern. And when we break through it, which we did on Friday, usually we fall the distance of what was the dome. So the dome kind of started through here, and ultimately that was the height to what's known as the neckline. If we just pick this line up and move it down, we likely fall that same distance. Do you not find it fascinating that it also coincides with these, what would be potential support levels because of all-time highs? This is why I love the chart so much. So there's confirmation on a few different indicators, tools, ways of measuring, patterns, that this is what the chart's telling us, okay? Let's remove all of this for now and look at, well, what potentially does this week bring in terms of how we can trade it? So this week, we may very well start to test this moving average that we broke, the 200, this moving average that we broke, the 150, and maybe these levels here. I don't expect that we come up quite that high, but we always retest the scene of the crime at some point, right? So at some point, we will come and retest all of these moving averages and either, of course, reclaim them or reject from them. I expect we reject from them simply because there is no strength in the market and there is no catalyst on the horizon for upside. There is only catalyst to the downside. So, with that said, what then happens? We get the rejection, we come down, and we will likely come down further than where we were, right? Maybe we find a little bit of support through what would be these levels here around that sort of 628. Then we might, come up and do a little bit more testing of different levels here, which would have been support through here. We kind of drift back down. But ultimately, the same way we go up and down, up and down, up and down, is the same way we come down. This time, though, you need to make sure that you're on the right side of the trade and we're not placing bullish trades. So what am I looking for as far as entries go? Let me draw in some lines. So whatever level we get to and reject from, my indication of enter a trade is the rejection of a level, whether it be a support level or a moving average. I'm looking to play bearish trades. For me, what I'm playing is a call credit spread. And essentially that's saying do not go above this price. So for example, I'm looking at this sort of 680 level as a safe trade. Let me get rid of all of these for this coming week. Now I could push that further if we get some movement to the upside. I could give myself even a bit more room to be extra safe and I could push my level out a bit further. But ultimately, if I'm saying I don't expect to close above this 680 level, for my trade to go against me and for me to lose, we need to reclaim every significant moving average. 200, 150, 150, even the 20, plus all of these previous support, now resistance levels. I don't know about you, but I do not see that happening when we're now in a market that isn't pricing in a single rate cut. And I think that we will get rate hikes. I've been in the rate hike camp for quite some time, so it was no surprise to me that rate cuts were off the table. So with that said, we still haven't priced in rate hikes. So when that comes, there will be more downside, right? So let me show you the exact trades that I'm looking at. And of course, this will all vary depending on what we actually do in the morning and where we reject. So what am I first looking for? Like I said, rejection from this 200 moving average. If we reject, I place my trade. If we get through that and then we look to reject at the 150, that's when I'll place my trade, and so on and so forth. So I'm looking for the rejection. And then if we come over to SPY, so I said kind of anything above this 680 level. So if I were to go out, now I've also been trading shorter duration contracts. So 1, 2 to 3 weeks, thereabouts. What I actually like the look of, even at these prices, at the 648 closing price of Friday, I like the look of this April 10 call credit spread at 680. So if I place my sold call at 680, my bought call at 690, what this means is that I would receive a net credit of 160 per contract. The margin that I'd be required to put up for that trade would be 1,000. Now, what does that actually mean? Because it doesn't mean that we'll lose $1,000. It's possible. That's the maximum possible loss, right? 1,000 less your 160. So maximum possible loss, technically 840. But you get to choose how much you want to risk. Meaning, if you hit a loss level of, let's say it's $100, you're like, you know what? I'm prepared to risk $100 for this trade. If the trade goes against you and you get negative 100, take your loss. Just take it. Don't wait to lose your full amount if that's not the way you want to play it. So what I do is, this is why timing entries is so important. It's why I'm looking for the rejection first. Why? If I get the rejection, then the next likely move is down. So the next likely move going in my favor removes all of this negative return from my likely trading scenario. It's still possible. Of course, it's still possible. Absolutely. But if I get that move down, so let's say that right now we got that rejection. If I get that next move down that I expect, and I get it within the week, so if we come out to March 27, if I want to make $100 from this trade, so close it out once this net credit of 160 is an actual profit of, call it 100 or 110, all the market needs to do is drop 1.2% by the end of this week, and I close out this trade for $110 profit per contract. The likelihood that that happens is high when I place my trade at the right level, right? And you can see it all throughout here. We rejected off of both moving averages here. We dropped a couple of percent. We found rejection through, once we broke the 150 EMA here, we found the rejection. We broke through more than that percent. We found rejection up here through these resistance levels. We dropped a couple of percent. Rejection, drop, and so on and so forth. The other thing that I want to share with you, so that's the trade that I'm eyeing off, and obviously all of this will vary. Even the date that I select will vary based on the time I enter the trade. So I'm not saying go out and place this trade now. I'm saying have an open mind as to, let's play the downside. I'm only trading 3 charts right now, technically 4. SPY and SPX, I take the trade that I want on whichever underlying based on where I get the best credit. Sometimes it's SPY, sometimes it's SPX. For me, I'm in Australia, so all the tax benefits of SPX don't apply to me. But if you're in the US, SPX is great. So I simply take whichever ticker is going to give me the better return because they do vary. QQQ. And again, I'm looking for the same thing. I'm looking for QQQ to drop to probably these sort of 540 levels over time. QQQ, I'm looking for rejection through the, again, moving averages, but especially through this level here. This was where we could not drop below. When we finally did, it was significant. I expect that we get some rejection here, plus the fact that that 150 EMA is right on top of here as well. So if we get rejection through here, again, I'll be playing my call spread probably somewhere up here because I don't expect that we get through these moving averages and I don't expect that we get through this next level of what was support now becomes resistance. And then the final chart, SMH, semiconductors. Now, semiconductors haven't had the drop like SPY and the Qs have yet. I'm expecting it to come. So the first level that I'm eyeing off is, of course, this moving average, right? So I think that we probably drop down to here. Again, I'm looking for the rejection. It already happened through this moving average through here. That's the 50 EMA. The 20 is sitting right above. So all we've got here is rejection, right? Nothing here is looking bullish right now at all. So what do? I place my trade. It'll probably be somewhere up here. Super safe. I don't expect stocks like semiconductors are getting back to all-time highs in this current market climate. Safe trade. All we need to do is drop a couple of percent and that trade's in profit. And 3 charts. That's it. I've done a partial video. My last video kind of explained a little bit about the trades that I will and won't be taking and the fact that I've limited what I'm trading. But I'm going to do a full video explaining the why behind that because I am feeling such a sense of just like freedom and clarity and calm now that I've decided I'm not trading a bunch of different things. All I'm trading is these three tickers, and all I'm trading is credit spreads. So, yes, I will place put credit spreads when the time is right, when we're bouncing from support, when the next likely move is up. But for now, this week, I'm looking at the best opportunities, which I believe are going to be the call spreads. It might be put spreads, in which case that's what we'll enter. But at the moment in this market, I have just been closing out call credit spreads in profit day after day after day. I literally place them, they profit. Then I place one, they profit. So it's been such a profitable um, trade for me, and it is absolutely what I'm looking at for this coming week. So don't freak out about this level down here at, the sort of 610, 615, give or take, but plan for it. Know that that's most likely what's coming next. All-time highs are not what's most likely coming next. A bit more downside is, and you absolutely should be taking advantage of that. Now, what I want to say, if you missed my mentorship, I will open up just one spot. Now, the people I have in this group are amazing. And we've already formed such a valuable space where people can just talk through what's going on, have a discussion. There have literally been a handful of people on the calls, and that's why I keep these groups really, really small. But if you're looking at this style of trading and you're like, I actually want to do this, but I didn't join your mentorship, reach out to me personally. I'll put my email address below. I'm not going to put the sales page or anything like that because I don't want people to just buy it. Because I honestly only want to bring in one more person if you think that this is the next move for you. We can just have a bit of a conversation around coming on in because I'm very protective of my mentorship groups. But I'm happy to bring in just one more person if you feel like this is the right next move for you. Otherwise, that is it as far as what I expect for this week. I hope you all have a wonderful week of trading. I hope you make some money from this downside, and that you also just start really creating trades that make sense for you. Not what other people are sharing on the internet, but what you ultimately feel good at trading.